Welcome to our deep dive. Today, we're looking at Galt, California. The numbers coming out right now, they seem to be telling, well, almost two different stories. So we're digging into the single-family housing market there, trying to understand the momentum, what's happened the last 3 months, and maybe what you can expect in the next 90 days or so.
Yeah, it's really interesting. There's this tension, like you said, between supply and demand. Galt's median price, it's holding up pretty well, mainly because inventory is just so low, critically low, actually. But at the same time, we're definitely seeing signs that buyers, well, they've gained some noticeable breathing room compared to, say, last year or the year before. They have more leverage now.
Okay, let's unpack that tension a bit.
Yeah.
Looking at the latest numbers, like September 2025. The median sale price for single-family homes,
Yep.
$596,138. That keeps up the climb we saw over the summer from the mid-500s, and it puts us up roughly 7% compared to this time last year. But inventory, like you said, that seems to be the real bottleneck here. We're looking at only about, 76 active listings? Maybe 80 on a good day,
Yeah, very few homes available.
which leaves us with a pretty tight months of inventory, or MOI, somewhere around 2 to 3 months supply.
And that low MOI, that's fundamentally why prices haven't really dropped significantly. California's overall housing shortage, it acts like a sort of pressure valve, keeping a floor under pricing, especially in desirable areas. When supply is this thin, technically, yeah, it's still leaning towards a seller's market.
Okay, but wait. If supply is that low, why have the days on market, the DOM, almost doubled? That seems like the real standout figure here.
Yeah.
I mean, the average time a home sat on the market in September, it shot up to around 85 days.
Yeah.
That's a huge jump from just 39 days a year ago. A staggering difference. So if homes are sitting that long, shouldn't prices be, correcting more sharply?
Well, that 85-day average, it signals a real shift in the buyer's mindset. They're just not afraid to walk away anymore. They're negotiating harder. And a big part of that is high mortgage rates. They're still hovering in that mid 6% range, maybe even touching higher sometimes.
Right.
So you've got this standoff. Sellers, they're maybe still thinking about that pandemic era appreciation, hoping for top dollar. But buyers, they have rate fatigue. They're being much more cautious.
And you can see that playing out in the closing data, right? Like the price per square foot is holding steady around $320. But the buyer leverage, it's clearly increasing. Almost 40% of listings, 39.5% to be exact, had a price cut last month. That's up, 9 points from last year? And the sale-to-list price ratio is just under 100% now, around 99%.
Exactly. So sellers are having to adjust their expectations often before an offer even comes in just to get attention. The buyer is definitely more in the driver's seat during negotiations, particularly those buyers maybe moving to Galt because it looks like better value compared to, say, Elk Grove or Sacramento.
Yeah, that makes sense.
So if a home isn't priced just right or maybe isn't perfectly prepped for sale, it's probably going to sit. It could easily hit that 85-day mark. And that puts a lot of pressure on sellers.
Okay, so if the market's already feeling a bit stalled, what's the outlook for the next, say, 90 days? We're
Yeah.
heading into the holidays, the typical seasonal slowdown.
Yeah, you're right. We definitely expect the usual seasonal factors to kick in, so fewer new listings hitting the market through late fall and early winter. And homes that are listed might just sit a bit longer, plus that high rate environment isn't going away quickly. Most forecasts suggest rates will likely hold somewhere between 6% and 7% well into early 2026.
Oh.
Which, continues to dampen overall buyer activity. It especially impacts first-time buyers who often rely on maximizing their financing.
So does that mean prices finally break? Do we see a real drop?
We don't really predict a crash or a major correction. Not in Galt. That fundamentally low MOI, that lack of supply, it just won't really allow for it. Instead, we think pricing is more likely to just sort of plateau, probably hover right around where it is now in that mid $500 K median range. The market should remain, maybe slightly in the seller's favor on paper because of the low inventory, but it's going to feel much closer to neutral. We might even see the MOI creep up towards 3 or maybe even 4 months by the end of the year. And that definitely offers more choice, more breathing room for those buyers who are motivated and ready to act.
Okay, so summing it up, Galt seems kind of stuck in this pricing standoff. The market's resilient, yes, because supply is low. But it's also clearly moderating because buyers are feeling the pinch from interest rates. So for you buyers out there, it sounds like you have more time now. You have leverage. You can afford to be a bit pickier.
Absolutely. And for sellers, the message is clear. Pricing needs to be strategic and realistic right from the start. If you want to attract today's buyer who's definitely more cautious and rate sensitive, you really can't afford to overprice your home. Otherwise, you risk becoming part of that painful 85-day average statistic. Preparation and pricing are key.
Great insights. Thank you for listening to Time to Buy or Sell by Weichert, Realtors Sierra Pacific Group. Visit WRSPG.com, or you can call us at 916-619-1971 if you'd like more information or maybe need some help navigating the Galt housing market.